Crypto markets remain in bullish mood as Bitcoin knocks on the door of new highs. Ethereum gives back its outperformance, but other altcoins like Solana remain super strong. And IBIT, the spot ETF on Bitcoin, has got options starting trading today. Let's see if that brings in a bunch of inflows from US investors. All that and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. I've got my man Dave from FRNT, and today's guest is Edd Carton, Managing Director at Aurel Partners. How you doing, man?
Very good, thanks. Thanks so much for having me.
No, good to have you in the studio.
Welcome on, Ed.
So we are holding above 90k, which is pretty good. Quite impressed with that.
Oh, yeah, very impressed. Very impressed given the macro dynamic right now, which actually acting as a bit of a headwind to crypto, and namely in the form of stronger dollar, higher US yields. So I think it speaks to just how strong this underlying bid is. And this.
Well, Michael Saylor's been buying billions of the stuff, right?
Yeah.
Like he's publicly announced just how much more he's bought in the last 10 days or something.
Billion or so, yeah.
Yeah.
That he's buying it. I think he realizes this is go time. And we still obviously got all the speculation around the US Reserve, adding Bitcoin to the US Reserve. So
a strong old tailwind right off the back of the elections. I mean, I think I've always said, there's two things happened. One, traders don't like uncertainty. So, whether it was going to be the blue team or the red team, just being knowing which team is going. But it has happened. It was, red team, Trump, really strong kind of bullish sentiment policy. And I think that's really helped carry this forwards.
There's some spec about Trump's going to meet Coinbase CEO. And people are like, are they going to discuss custody of the Bitcoin strategic reserve and stuff like that, right?
But there's a lot of that, right? I mean, so obviously, Brian Armstrong's meeting with Trump and he's helping kind of, help him sound out advisory roles. Howard Lutnick, also helping a lot in terms of advisory capacity, both kind of very bullish people. And then even with Ripple, right? There was, and we saw that the Ripple moves on XRP on the back of kind of, speculation that Ripple's getting a bit of a more kind of pro crypto nod. So it's really interesting.
That's one crypto I've stayed well away from, Ripple. I just didn't get involved. I got involved in ETH, Bitcoin, Solana, but I just stayed away from Ripple. Maybe that's a mistake.
Well, it's part of the first wave a few years ago, right? When everyone's getting into that. But yeah, I like the narrative shift is huge. It's clear, we've gone from what, the last 4 years or so of, this abrasive administration towards crypto, just court cases, sprouting up everywhere, to now clearly there's an openness, and Trump clearly wants this input and involvement. So it's huge. The narrative's huge. I think we've spoken about before, and actually, Ed's an OG, who's been in the space from an institutional side for really since and we'll get into this.
You guys know each other, right?
Yeah. I don't think you're in the space from an institutional side and don't know Ed, but
right.
But and we should get into that. But
yeah.
I think the institutions that I've spoken to previously, and again, be interested to hear your thoughts on this. So many were like, look, we get it now. A lot of people have gone on the journey and gone, we understand Bitcoin. We see it as this commodity or this asset class. It's here to stay. It's just a lot of career risk involved in kind of actually moving into the space.
Well, there was a joke that all the big hedge fund managers had it all in their PA, but they just couldn't put it in their funds.
Yeah.
Right.
But now, and this is what I've been saying, now I feel like the career risk is flipping, in that the career risk is going to be
if you don't own it.
If you don't own it, or if you're not,
that's a
building
big
a
shift.
Strategy around it, right?
That's a huge shift.
Can you imagine now, particularly if you're in some kind of fiduciary responsibility for a treasury or whatever it might be, and then Bitcoin, you're seeing what MicroStrategy are doing and the success of that, and your investors come to you and say, well, what's our Bitcoin strategy? And you go, I haven't even looked at it.
But we've seen that, right? It was at Microsoft, and I'm not sure kind of how much legitimacy behind this, but they were looking to, some of the shareholders were looking to bring a class action on the grounds of the Treasury Department not having fiduciary duty because they're not allowing them to put crypto on their balance sheet, right? And we're seeing, we mentioned MicroStrategy, but there's plenty of other firms, US side and also globally. We saw it, and the name escapes me, but in China and Japan, there's firms starting to put sizable amounts of Bitcoin on their balance sheet for kind of corporate treasury management purposes, right? And you wouldn't, rewind kind of 12, 24 months, with the exception of like MicroStrat.
It's unheard of.
So Ed, we're all getting excited still, right? But we should probably
tell us a bit about when did you, because you're ex equity derivatives like myself, right?
Way back. So I've been in like the crypto digital asset space, I'd say probably about 13 years. I always kind of age myself in the space that the first desk that I was like properly working at, we were putting Bitcoin across the counter at $300 a Bitcoin.
Wow.
And, there was only a handful of liquidity providers at the time. It was a very different landscape. I mean, in terms of talking about bad banking rails, like in the UK, if you wanted to bank crypto or kind of facilitate crypto payments, you had to use, banks in Europe, like, banks in Poland, etc., just to facilitate, sterling Bitcoin movements.
Right.
Back in the day, TradFi background, worked at Bloomberg, worked at Accenture, Credit Suisse, a few other banks, and found my way into crypto. I spent a good chunk of my career at Flow Traders, as a well-known kind of market maker who's gone relatively far down the rabbit hole on the digital and crypto space. So and then most recently in my current seat, and it's been great to kind of be part of that journey and watch it change. I mean, the good and the bad. I mean, and talking about career risk, had a lot of it in the early days. And people are like, oh, what do you do? And you say crypto, and it's that instant kind of sucking of air, or parents kind of making sure you're going to be okay.
Stigma.
What? Because I mean, that was really early. I've come into it. I've professionally been in the space like 4 years or so.
Right.
Back then, I mean, there was the risk around that from a career perspective was huge. But what gave you the conviction to move into this space?
So weirdly, before I got into kind of crypto professionally, I was doing a lot of fundraising for renewable energies and kind of new technologies and renewable energies. And without kind of boring our listeners to death, it was stuff like ways of hydrocracking carbon syngases in order to then create kind of these new kind of energy efficient kind of green ways of producing electricity. And the exciting part wasn't so much. I'll be very honest, that I wasn't being this kind of evangelical green energy guy. It was just more, okay, this is really interesting technology, and it was a bit kind of cutting edge, and we were looking to get funding for that. And so there's always been that thing about, okay, where are we pushing boundaries?
Where's the growth area?
Yeah, on technology.
Yeah.
And then you take a step back, and earlier in my career, and still to this day, people kind of saying, I just don't get the value of Bitcoin. Like people say, 90, 93K, don't get it. What's the value? What's behind it?
Yeah.
And so kind of my answer has always been, gravitated around this kind of, well, my career, when I started out, like I missed the .com boom, right? And we have a look at what that was all about. And that was the emergence of this technology, which is essentially the base technology was IP, Internet Protocol, and World Wide Web predicated off it. Now, at the time, to get exposure to that technology, you couldn't get like Delta One exposure in the technology. The best you could do, you could buy like an equity stock in a company which had .com in the name, right? So it was almost like secondary or tertiary exposure to the technology. So, I invest in a company which ultimately uses Internet Protocol as part of its goings on. Bitcoin, which has been referred to by many as the kind of, the money in protocol, the Internet Protocol of money.
Internet of money.
Exactly that. And, buying a Satoshi, or a share, if you want to kind of simplify it in that sense. So buying Satoshi is a way of getting kind of Delta One exposure to that technology. So the more people that hold Bitcoin, use it, build on it, we're looking like, hash rates and wallets, it's kind of, metrics for this.
It's like buying shares in that general ecosystem.
In the internet, right? But
yeah,
at that time, and this, I think, is the first time you can do that. And this holds true for other blockchains, not just Bitcoin, right? But
Well, that's another question people have. It's like, if there can be thousands and thousands of different coins, like, why is Bitcoin so valuable?
But I love it because it's just Darwinistic. And, if you are like, all we are kind of we're markets guys, right? The markets prevails. And it is quite evolutionary in that sense, right? So if there is, a leading coin or a leading blockchain, the market will dictate that. And
I think the biggest thing is about the trust, right? So trust in institutions, trust in money, in regular fiat money, has broken down because the irresponsible actions of all these central banks and governments, right? They just print and devalue and debase money. So I think the trust breaking down created the use case, the need for a new form of money that was trustless, that had a finite supply, that couldn't be inflated away, right? And that is what is growing, and that is what is building. And the more people who recognize the need to participate in a trustless form of money, and maybe you don't put all of your assets into it like people like Saylor are doing, right? But if you don't have any of it, then what are you doing, right? I see it as a bit of a hedge to fiat currency debasement, that if you see what the goings on, and every time we just have more and more trillions and trillions of debt, and actually surprisingly Trump's now started talking about paying down debt. Believe it when I see it, right? But in general, the whole world is massively indebted. You look at the slopes of those curves, they're going exponential in terms of the amount of debt these countries are in, and the only way out is to print more money to finance the debt. So when you recognize that, you're like, well, how do I protect myself from this, right? And allocating some percentage of your reserves into something like Bitcoin that you can't print is a lot of people's solution, I think.
I mean, one thing where I'd be slightly more nuanced around that is thinking of Bitcoin in terms of like digital property or digital capital rather than necessarily money, because I think people get kind of hung up on this thing of the transactional use of money, and that kind of definition.
Just like a store of value, like a Bitcoin, like a gold alternative.
And in some ways, Bitcoin isn't a good form of money when I think of it like that. But in terms of being like this store of value or this digital capital, like that's the power in terms of hedging yourself against this ongoing currency debasement, which I don't see we ever get out of, right? I mean, I think global money supply increases like 7% or so a year.
But the counter to the store of value point is that a lot of people say, how can you have a store of value that moves on like a 60, 70 vol? Yeah. It's not storing my value on a day-to-day basis because it could drop 20% tomorrow. That's not a store of value property really, right? But I guess the caveat that is, but if you zoom out and you ignore the daily swings and you literally look at the annualized return of this thing since its existence, you could argue it does store your value, right? So like, again, going back to the Saylor point, Saylor talks about running towards volatility rather than away from it. A lot of people run away from the idea of crypto because it's so volatile and it scares them, right? But he says, but look at which direction the volatility is primarily coming from. It's coming to the upside. Yeah. So you're actually benefiting from the volatility because the thing just goes up, right? Yeah. Like if you zoom out long enough, the thing just goes up. So and I don't know.
And your fiat isn't volatile as such, but it's quite consistent
its purchasing power is just going
in the decrease of its purchasing.
I mean, going back to kind of the store of value play, I mean, like, how is it storing your value or it's storing your value, which is on a decreasing trend line? I mean, look, maybe kind of an unpopular view. I mean, I don't really buy so strong into the kind of almost like sociological argument that, that Bitcoin and kind of these fiat replacements, just because I take the kind of big dose of healthy realism that I'm probably not going to be alive to see the kind of end results of it, or at least in my career lifetime. And I think it's going to be very impactful. And again, I'll go back to this point. I see it as a kind of very impactful on a kind of socioeconomic standpoint technology play. Am I completely sold that we're all going to be transacting with Bitcoin in 5 years from now, and the fiat currencies will be completely dead? Don't know, and I'd probably take the trade that there still will be a fiat country.
Well, I mean, you can't really, right? Because governments, to some extent, governments are going to resist that as much as they can, right? So I don't think it's a case of saying those currencies aren't going to exist, but I think it's a case of recognizing that the value, the purchasing power of fiat money is just dropping like a stone.
Yeah,
right?
but this is the thing, and this is why I don't like to kind of complicate it with thinking of Bitcoin as money, because then it's okay if we can all accept that the value of currency is going to continue to fall over time. Then right, what do I own to hedge myself against that and to preserve my wealth? And then you start looking at all the assets you can own, property, stocks, NASDAQ, all this stuff. And the more you do the work,
Yeah.
as everyone likes to say, the more you do the work, the more you come back to, God, Bitcoin is the hardest asset.
Which just outperforms everything. Yeah.
And it's the hardest asset that's made for this digital age. And I think that's I think that's like the key thing around it. But I mean, the interesting thing and all the stuff with what you're doing, Ed, like, it's just like, it must be fascinating for you in terms of seeing this evolution in terms of institutional involvement and adoption of this.
Because you're seeing like who was in it 13 years ago and who's in it now, and the names, and how those names are changing, right?
I mean, that's great. And, and it's just, it is fantastic to see that, both from a kind of career standpoint, and very kind of selfishly on that standpoint, but no, like also taking a step back, and it's just, it has been so impactful. And I don't think there's many other kind of examples that you can point to that in a kind of, 5-year period or 10-year period has kind of had so much of an impact. And, both from the kind of the name of the institutions which are now getting involved, but, also we look at the kind of, we spent up talking about how much impact, like, elections and some of the kind of the powerhouse nations of this world are having. I think a lot of last year, we saw this kind of like regulatory arbitrage being played across the globe in terms of where was like, the crypto friendly place to be. We saw, a lot of firms obviously exiting the US and going east.
Well, Dubai was good for that.
And
Portugal
Dubai still, right? With the VARA license and a lot of firms setting up shop over there. Yeah, I mean, Portugal, the big one was it Lisbon when they did the 0% tax. So we had like a load of, pro Bitcoin chaps kind of going and even like moving over there, right? And it's
totally.
And it's sunny over there as well most of the time.
Yeah, it makes a difference from here.
Ed, where do you rate? Obviously, if we look at this year, it feels like a big year. Like we had the ETFs.
Yeah, that feels like an age ago, though, doesn't it?
Yeah. So we had the ETFs. We've now got this crypto-friendly administration. We've got talk about Bitcoin being a strategic reserve asset in the US. Where does the current state of play rank for you in terms of some of the sort of biggest moments you've seen over the last like 13 years of being in the space? Like, does this feel like a really important time and a really kind of catalytic moment for the industry?
I think we're building, right? And I really feel like, the analogy I give, it's kind of like that pressure building behind something. The one bit which I think that, and I'm not the first person to have said this, but for me, the huge catalyst is going to be more actually a bit boring. It's the plumbing behind it. So there is no centralized clearing. And of course, I'm going to talk about that because I'm a TradFi guy. But, it is this weird dichotomy that, you've got something like, Bitcoin or, other cryptos, which are meant to be built, on the predication that it's decentralized.
Yeah,
you don't need this centralized thing. However, again, I go back to being a bit more of a realist that, you do need it. And for all, the plumbing, that there is no, real prime brokers.
To get big money, to get real money involved, you have to have that kind of plumbing.
Basically. Yeah, and to get and once we get there, then it might evolve even further. Yeah, but you just cannot escape.
Yeah, but it's like physical gold against gold ETFs, right? It's like there's loads of gold bugs in the world who say, well, if you haven't got physical gold in a safe, then it's not gold. You've got nothing, right?
Yeah.
But then you look at like how much AUM there is in GLD, right, and gold ETFs. It's the same thing. It's just we're just rebuilding a new asset that's going to have that kind of dichotomy where there'll be the die-hard native crypto guys who will say, if it not my keys, not my coin, right? And there'll be the guys who are like, well, I'm just using it to diversify my portfolio. It's the stellar asset on a sharp adjusted basis, and it protects me for these various macro scenarios. I'm going to allocate 5% into it, and I run however many billion, basically. So I'm like a massive buyer of it, right?
Look, to my point, I still think that there needs to be that kind of another catalyst movement, but I think this year has definitely got to go down in the history books of, the US ETFs, and you look at the ETFs performance in terms of how quickly they grew, and then how much AUM they've now held on to. The growth in the derivatives market, both in the kind of more TradFi kind of, we're talking about, stuff that's gone on CME, Eurex, but also NASDAQ listed options on
Well,
the
we
ETFs.
need to talk about the IBIT ETF. They literally launched today.
Today, right? Yeah.
The ETF options, sorry, yeah.
And I think that's going to be, let's watch this space. But the fact that there even is this product now, SEC signs off on it, CFTC goes, no, that's quite firmly not in our back garden. That's, for the OCC to kind of look at, and they've move forward with this, and we're now at this kind of position. And I think it's going to be really interesting to see the participants that come into this. On one hand, I think it's an accessibility play for maybe those who couldn't or can't access something like a perp or another form of swap in order to do some kind of price speculation. But then also for the institutions, the kind of the covered carries, and calls that are going to be written off the back of the ETFs. I think it could be huge in terms of the volumes which we see come into this.
Are the IBIT options necessarily bullish spot price? I see how they're huge in terms of attracting, again, just more capital into the space, and maybe that's kind of eventually sort of feeds through. But what are your thoughts around that in terms of impact? It's
tricky because you would have thought, like, given the kind of potential for a breakout, especially post-election, if you got Trump coming in, anyone who wanted to speculate and buy Bitcoin had a ton of ways of doing it, right? They didn't really need to wait for IBIT options, right? There are lots of ways to do it. Whether it's MicroStrategy options, whether it's BITO options, and if you're not forced to trade on US exchanges and you can trade elsewhere, then obviously there's loads of avenues, right? So it's not clear to me how much of a delta play it is that you get all this massive inflow of delta buying because everyone wants to buy call options, right? You get it for like a day or half a day or whatever, right? And then similar story, like a lot of the sophisticated institutions in the space would have found ways to hedge it, right? They would have had smart ways to hedge it, right? These guys have been around in TradFi trading these instruments for a long time. So it's not obvious if there's a big delta impact, right?
But it could be, probably something that, we'll find out as these products mature. And I definitely don't know because, only got launched today, but some of the other options out there, they do have pretty high hurdles in terms of like the IM requirements, 25, 30%, margin requirements, with your SCMs, etc. Whether like a NASDAQ, because it's an option on the ETF, okay, on an equity, whether there's slightly less of a capital requirement.
So there could be a lot of switching there.
Yeah, and some netting capable, again, TBC on the treatment of these by the primes, but those are things which I think could be really big and kind of...
It could crush the CME volumes, right? Everyone could just move from CME to IBIT.
To be a bit cruel, like the CME options volumes, I think that they've kind of struggled a bit, right? If we look at compared to someone like Deribit, and I know it's, maybe not kind of apples for apples.
I wonder if MicroStrategy options take a hit as well.
That would be interesting, right? But then, why then we look at the use case of why would someone put on a MicroStrat option, right? And is that because, they're just wanting to kind of do some hedging strategy around their MicroStrat position? Or, is there a more sophisticated kind of options strategy going on? That's...
Yeah, it feels to me like MicroStrategy, given the way that stock's traded and the beta that it's had to Bitcoin, it's like been the ultimate speculative play on Bitcoin, right? So if there was any retail money chasing the upside and wanting to do it via options, that was the instrument to use, right? So the question is how much of that capital in that space, or the type of users who trade MicroStrategy options and buy calls, how many of them are going to say, okay, I'm not going to do it MicroStrategy anymore because I can do it a pure play on Bitcoin? I don't know the answer to that, but I think that will in large part determine how much volume we see on IBIT, right? At least in the near term. Yeah.
And I think that it's all, we were talking earlier, it's all just part of this evolution of the space. And I think that's like, if that's the positive takeaway, right? We continue to evolve the products, and derivatives is going to clearly be a massive part of allowing institutions to come into the space.
Yeah.
So we're getting that. So it's all good vibes.
With every market, right? It's the derivatives market, massively dwarfs out the spot market, and this market is being no different to it. I think the options are quite interesting. Like we may see kind of what we saw back, with the FX markets and the FX options, and maybe this is going to be a very kind of similar approach to how they trade there. But to your point, I think positives from this. This is I often use the phrase this thawing of attitudes, right? It's normalization with tradfi markets, or just normalization with what market participants known to expect, like having an array of products, whether that's an ETF, a future, an option, a swap, to trade with. This is all a suite of products which then are derived or use the kind of Bitcoin or whatever it is as the underlying.
Well, what do we make of this, the give back in ETH? I mean, literally, every time you think ETH's finally going to have a go, and it does like 10 or 20%, you wait a week and it's given all of it back.
I think we killed it last week. We all got really bored.
I know.
I mean, there's two things with ETH. Like one, like it needs to maybe sort out, its inflation deflation dichotomy. Like, I think one of the last kind of Ethereum improvement programs, it in terms of the rate in which ETH is burnt, if it isn't deflationary and it then becomes inflationary, that's obviously going to be an issue for kind of price on a long-term scale. But then also, you look at, some of the other, other L1s out there, people look at Solana a lot of the time.
That's making new highs, isn't
like
it?
ETH is fantastic. And, and it's going to be the saltwater kind of, smart contract layer one that was out there. And is often seen as like kind of like the gateway to other cryptos, but it is still quite technical in that sense that if you want to build on it, and and I personally feel it's got a very strong kind of developer mindset community behind it, whereas something like Solana is a bit more accessible. Again, I'll raise my hands, like way above my pay grade when it comes to kind of building stuff, but from what I've kind of read and heard and feedback is that it's much more accessible in terms of building apps on it and kind of a bit more user friendly in that sense, which could be attributed why it's being a bit more kind of successful. But and it's interesting, like we do a lot around like the ETFs, US listed ETFs, and ETH just really haven't had that bullish move that obviously like Bitcoin did. And
I think as well the other thing I think is interesting. So like Bitcoin dominance is back above like 60%. So we had that kind of big sell off immediately knee jerk after Trump. And then it kind of recovered all of that last week. Despite some like bits of outperformance like Solana, Bitcoin's kind of like reasserted itself again as
but I mean, I'd say a lot of the alts are doing all right though. Solana, Sui's up 100% since we talked about it in the episode with Raoul Powell, right? Here. So if you guys listen to Raoul, you've done well. I mean, I remember I allocated a bit into Sui at that time. It's up 100%. So it's just ETH seems to be the dog. Like memes are flying. Some of these other layer ones are flying.
But Bitcoin's still dominant. But I do think as well, like I say, we've actually last week, like the macro headwinds were pretty strong. We spoke about obviously one of the things there's two things with ETH. I think that's interesting. Obviously, this expected more friendly regulatory environment should be good for DeFi, and that's obviously going to feed through to ETH. But then also on the yield side of things, we've been talking about global rate cutting cycle, lower yields, but all of a sudden you've had this move higher in US yields, like across the curve, which kind of lessens the attractiveness of DeFi yield and stuff like that. So I just wonder.
You're almost saying ETH's done the right thing on the macro, but Bitcoin's ignored it.
Yeah, and Bitcoin still just has this huge like demand shock story that we're anticipating, and not just anticipating, we're seeing it in the ETF flows. And yes, it's hard on the ETF flows to kind of separate out what's just like basis trade stuff, but clearly there's some real money flowing into that stuff.
Interesting, though.
And then again, Bitcoin, it will still be the first one, right? For the TradFi boomers that go, okay, all right, now I get it. Like it's going to be Bitcoin first, and then they'll go out the risk curve.
100%.
So I still feel like I still think ETH's gonna start to perform. But
I mean, it's funny in the option space. I'd say, how I was saying, like the way the skew was moving last week, like people were getting ready for a short-term rip in ETH. That's been faded. So short-dated call options have got crushed on ETH back to zero again.
Liquidations out.
But the flows in the March 25 expiry are still coming. So people are buying call spreads and they're putting serious premium to work in on Deribit. This is right. So like I think $8 million of premium or something like that was spent in a March call spread. I can't remember the strikes, but like. And then they've been building those for weeks, right? Those March call spreads. So there's some big trades out there on ETH, but they're all looking out to March. Whereas in Bitcoin, it's about, I had a load of NOV calls. Now I'm rolling them up to debt calls
Yeah.
and just keeping it short dated because the rally's kind of gaining momentum.
But maybe it's a bit more simplistic than that, right? You know, maybe kind of those that can, and the kind of the retail market, and I guess maybe the crypto natives, ETH just isn't exciting. Like, you know, in terms of, we've seen it trade up at like, you know, 5,000 there or thereabouts, trading about 3,000 there or thereabouts now. So, you know, you're trading your capital appreciation. Yeah, you know, it's probably a safer play, but it probably doesn't have that capital gains. Whereas, you know, there's a lot of these other L1s, you know, and even if you want to go down the kind of the meme stock kind of crypto world, that you can probably get a lot more kind of on your percentage returns. And then the other side of the spectrum, so they won't look at ETH. And then the other side of the spectrum, you've got, you know, your more TradFi, Boomer Brigade, if you want to go down that route. And maybe they just have the time to kind of just look at Bitcoin for now, at least. And so, you know, unfortunately, Ethereum's just kind of
But
if
if you look on like some of the activity metrics and stuff on the Ethereum network, they're all like going great guns. So
Right.
yeah, it feels like more, like maybe you're right, it's just not sexy at the moment for
And the point you made is when Bitcoin dominance is at 60%, that's not the top of the bull market, basically, right?
No, and
Historically.
like, historically, and like the top of the bull market, that's been down at like around 40%, right?
Yeah.
So I think that's my thing. Like, I still think we're very, very, very early. You know, our friend Raoul Powell's banana zone, like
happened, but bang on schedule, right?
It has, but I think it's still like really early.
Yeah, I'm not saying it's done yet. It's not quite a banana yet, but it's growing.
And like having spent like too much time looking at charts over the years, like just looking at Bitcoin and actually the wider crypto space, it just looks so fucking bid. It is so bid. Like and to have this move that we've had in Bitcoin, and like the pullback's been minimal, and that's kind of stabilized. Everything about it just looks beautiful to me. Because I'd be more worried if we just kept like blowing through the levels nonstop.
Yeah, but you digest them and you hold.
You digest them, and then you consolidate a bit, and then you get ready for the next leg higher, and that's kind of where I think we are. It's funny. I tweeted the other day, like it's amazing how quickly 90K's become boring, like, and frustrating almost. Like 90. You just kind of sat around here for a bit.
I said, yeah. I use, you know, everyone's got sideways chop, right? And you're like, oh, you know, it's kind of a bit of a week, just kind of kicking around that range. But you know, I think also, you know, on this, it's not the worst thing to have, though, a bit of consolidation. Build some support in the books, because then if there is a sneeze, it doesn't slide all the way through.
Yeah, 100%.
Yeah.
So what's this all meaning on the vol side? So what looks good? How are you positioned?
So I mean, you know, I got pretty bulled up before the election because it was obviously a bullish catalyst. That's what was pretty well telegraphed, right? And I kind of fancied Trump would probably get in. That's kind of what it felt like was going to happen. After we got the knee jerk sort of through 80K, that's when I started lightening up a bit on any extra longs that I had. And now, I don't want you to be angry with me, but I am hedged on Bitcoin.
Oh, for God's sake.
I'm running at about
love the hedge.
Yeah, I'm running at about 70% hedge on Bitcoin because I did think that some of the momentum indicators are showing some bearish divergence on Bitcoin. For those who look at technicals. So I was looking for a pullback into around the 83K area on Bitcoin. But I mean, it touched 85 last week. It's very, the problem with the thing about these pullbacks is that you blink and you miss them, right?
Yeah.
When it has an explosive move like this, it can easily pull back to 83K, but if you're not at your screen at the time, you just won't see it.
So,
right?
so what sort of hedges then do you put on? What strikes? And
I've just got some put spreads, short dated, end of the month. End of the month short dated put spreads, because I think those are good in that they give you some leverage to a pullback. You get your money quite quickly, right? So literally in 2 weeks, those things are expiring. So if we go down, you don't need it to stay down for weeks and weeks and weeks, right? So we just need a pullback into that zone. You can unwind your put spreads, or maybe you run them until expiry because it's quite soon. And then I think it's time to get loaded up again for the next leg higher, right? So I'm not sure 100K hits us in November, but I'm thinking 100K at some point in December feels quite inevitable right now. And at the minute, I'm kind of leaning on the more hedged up side, ready to reload. But if we do explode higher, my hedges are going to evaporate. I'll lose the premium, but I'll still be long, basically. Yeah. So that's kind of how I'm running it.
I think as well, like it, once it does feel like the macro is kind of secondary right now, like there's just this powerful demand supply dynamic going on. I do think there's quite a strong headwind. I want to see the bond market calm itself down. I think it will, and we've actually seen seen yields correct lower this week. I think that continues to run. I think like the market, firstly, like Trump, I don't think it's as inflationary as the like knee-jerk like reaction is. I mean, he's 4 years, he was kind of okay, but the notion of tariffs, like it's complicated in terms of there's huge offsets, a stronger dollar offsets some of that.
Powell pivoted quite a lot in his chat this week, right? As well, last week.
Yeah,
it was last week. Yeah, where he saying they're not in a rush to cut rates.
So we've priced out something which is reasonable to price out some of them cuts.
And the yield curve kind of flattened on that, right?
Yeah.
So if it was super inflationary, then we'd be seeing the yield curve steepening and long end yields going to 5%, right? The fact that we haven't seen that is a good thing, I think.
Yeah, but we've got this huge divergence between like 10-year US yields and oil, for example, which should kind of, I think, keep the yield curve anchored a bit. We've still got this global growth slowdown. China's still emitting.
I was just about to say, they're going to be printing. Like it's just
but like we'll get to that. But for now, it's they're emitting this disinflationary pulse. There's been some disappointment around their 10 trillion stimulus, but because of the structure of it,
not enough.
But because some of the structure of it and some of it's like debt swaps and stuff.
Yeah, sure.
But they're gonna keep pumping and they're gonna be providing liquidity into this market. But again, there's a difference between like how inflationary this stuff is. A bit like I've always argued, QE is not inflationary when it's inflationary for financial assets, and I think that's kind of going to be the impact that what China's stimulus is going to have, and they'll just keep trying to inflate assets even more. So, but yeah, I think the yield move's overdone. So I think this week's going to be quite interesting because there's not any sort of macro data. Nvidia's probably the macro kind of data that we're looking for tomorrow. But I think if 10-year yields continue to break down and it removes that headwind, it becomes a bit of a tailwind. I certainly think this week we can hit 95K.
I feel like
maybe we do go to 100.
I feel like we're on opposite sides of this trade right now.
Yeah.
You think 100K by end of November, I think by end of December.
Yeah, I mean, time's running out, but
yeah, that's why I'd rather take that side. Rather have my side of the bet. I've got an extra 4 weeks.
Yeah, but I do think that's. And
why don't you be the mediator? What do you reckon? 100K by end of Nov or end of deck?
Yeah, I'm deck. I'm a buyer deck. I mean, it's not. Okay. I don't see it happening this week, and I think if anything, we're gonna have a bit more, sideways chop or even a slight capitulation down.
Heads with the smart money, mate. But all right, mate. It's been amazing having you on the show. I appreciate you sharing your thoughts and from your vantage point. It's a pretty unique vantage point, and it's good to hear what you're saying. And we will catch you all here again next week. Don't forget, like and subscribe to get these sort of shows to more people, so more people understand crypto and especially crypto options. We'll see you next week.